Hey guys, welcome to another Damilola Forex Academy teaching. In today's teaching, we're going to be talking about trend lines, the effectiveness of trend lines, and how trend lines are used in getting high probability trades in the Forex market. The trend line is one of our most important tools in our arsenal, and we use trend lines to get the highest probability entries. The trend lines gives us very beautiful sniper entries, and I'm going to be teaching you every single thing regarding trend line in today's video. So grab a pen, grab a book, and take note of every single thing I'm going to be talking about in today's teaching. Let's go, guys. So what are trend lines? It's important to note that trend lines are diagonal support and resistance tools. Let's go ahead and write that out. Trend lines are diagonal support and resistance tools. Okay, so when it comes to support and resistance tools, we have the Fibonacci, we have the horizontal support and resistance tool, and we have, so many support and resistance tools. But trend line specifically is they are diagonal support and resistance tools. Okay, and what are the uses of these trend lines? Okay, what do we use these trend lines for? It's important to note that first of all, okay, let's just write that out. That what uses of trend lines. Okay, it's important to note that firstly, trend lines are used to check the effectiveness or the strength of a trend. Okay, so trend lines are used to checkmate the strength of a trend. If a trend is strong, then prices would keep obeying a trend line. Okay, and if a trend is weak, then prices will violate the trend line. So this allows us to know that if we see prices make movements like this, for example, we see a trend line like this and prices keeps obeying the trend line, this allows us to know that the trend is still strong and price is still clearly on a bullish trend. However, if prices violate the trend line, it will allow us to know that the bullish structures or the bullish trend is probably done and price has now started a bearish trend that will send prices down. Okay, so it's important to note that trend lines are used to checkmate the strength of a trend. Okay, it's also important to note that trend lines, let's go ahead and write it down, that trend lines are also an entry and exit tool. Okay, so trend lines are an entry and exit tool. Okay, so because trend lines are diagonal support and resistance tools, they can also be used as entry and exit tool. Okay, so for example, this is a trend line, right? So if we see prices keeps bouncing on a trend line, okay, it can allow us to know that we can be able to get in on a buy entry right here. Since prices keeps respecting a trend line, we can be able to get in on a buy entry and probably buy to as much as this resistance right here. Okay, if prices comes back again to the trend line and bounces a little bit off the trend line, we know that okay, there's a high probability that this trend line will hold. We can buy, put our stop loss at the low, then buy to the high. So trend lines are used for an entry and they can also be used for an exit. Okay, so what does that mean? For example, if we see prices making all of these movements like this and there's a trend line that is rejecting prices, if we get a buy opportunity right here, we could decide to exit our buy at the trend line because the trend line could act as a resistance and prices may not be able to go beyond it. Okay, so that is very important when it comes to the trend lines. It's also important to know that trend lines are the first tool that allows us to know that a new trend is beginning. Okay, so trend lines are the first tool that allows us to know that a new trend is beginning. Okay, so what does this mean? This means that trend line is the first tool, a break of a trend line allows us to know that a particular trend is done. Okay, so if we see prices making all of this bullish trend, respecting the trend line, and prices now eventually comes and breaks the trend line. Okay, so trend line is the first tool that allows us to know that a new trend is beginning. That, okay, in this case, there's been a break of a trend line. Okay, a trend line is supposed to checkmate the strength of a trend. Okay, and we know the rules that if prices keeps obeying a trend line, it means the trend is strong, while if prices violate the trend line, it means the trend line is weak. Okay, so in this case, a break of a trend line has exposed weakness in the initial trend, and it has now told us that a new trend is starting, and we can be able to get a sell entry opportunity to ride the new trend. Okay, so trend lines are what are the first tool, okay, before chart structures tells us, before other confirmation for those that use indicators, before indicators even tell us, trend lines are always the first tools that allows us to know that a new trend is beginning. Okay, so trend line is a very, very important tool and one of the best tools in our arsenal. Now, what are the types of trend lines? It's important to note that we have the ascending trend line and we have the descending trend line. Let's go ahead and write it out. We have the ascending trend line and what? And we have the descending trend line. Okay, so now it's important to note that an ascending trend line checkmates the strength of a bullish trend. Okay, so this is an ascending trend line right here. It checkmates the strength of what? Of a bullish trend. Okay, so this is it. Then we have what? The descending trend line. Then the descending trend line checkmates the strength of a bearish trend. That is what the descending trend line checkmates. The strength of what? Of a bearish trend. And both are very effective. Like I said, the ascending trend line, a weakness in the ascending trend line tells us that the bulls are done and the bears are taking over. Okay, so if prices makes all of this on the ascending trend line, keeps respecting an ascending trend line, and we see a break of an ascending trend line, it allows us to know that the bulls are weak and the bears are here to take over. However, if prices keeps respecting the ascending trend line, it can even provide us an entry opportunity, because if price rejects the trend line and what? And we go on to see a break of structure, we can be able to buy. Okay, so, but trend lines are very effective. Okay, the same thing also for the descending trend line. If prices keeps rejecting a descending trend line, we can be able to see a sell entry when prices gets to the descending trend line. Okay, we can be able to tap into a sell entry, you know, or we can wait for even more confirmation by what? By break of structure, but all happening at the trend line. And we can be able to sell to as low as this level. Okay, so trend lines are very important, and these are the two very important types of trend lines that exist. So the next part we are going to be talking about is how to draw trend lines effectively. It's important to note that when it comes to trend lines, if you don't draw them effectively, you won't get the best results. Okay, so to get the best results from trend lines, you need to be able to draw them effectively and accurately. Okay, so now, how do you draw these trend lines effectively? It's important to note that one, let's begin and start from what? From the ascending trend line. So for the ascending trend line, this is how it is drawn. We need to have a minimum of what? Of the first two touches of the trend line. The first two touches are known as what? As the establishment phase. Okay, as the establishment phase, because what? They establish the trend. Okay, so these are the first two touches. Then the next touch is known as what? As the confirmation phase. Not just the next touch, but the next third, fourth, fifth, sixth touch, you know, are all known as the confirmation phase. If prices keeps respecting it, it means that what? Price has confirmed that the bullish structure is still strong, while a violation of it would have confirmed that there's weakness in the bullish structure. Okay, so we can see that here prices confirmed that the bullish structure is still strong, respected the trend line and trusted up. Here prices confirmed what? A violation of the bullish structure, which means that what? There's weakness in the bullish structure and the bears are now in. Okay, so the first two touches are known as what? The establishment phase, while the third, fourth, fifth, sixth are known as the confirmation phase. Price can confirm a respect of the trend line on the third, fourth, and fifth, and it can violate the trend line on the sixth. Okay, so it's important to note that whatever prices does at the trend line will affect our entry. Okay, so For the ascending trend line, like we said, it's important that we have what? The first two troughs. These are the first two troughs. The first two troughs are what? Are the establishment phase, while the third, fourth, and all of the other touches are known as what? The confirmation phase. So this is how to draw a trend line effectively. Okay, so the next one we'll talk about is what? Is the descending trend line. What is this descending trend line, or how do you draw a descending trend line effectively? Let's go ahead and write it out that, a descending trend line. Okay, so now this is a descending trend line. Okay, so if we see prices keep respecting a trend line, if we see price keep respecting a descending trend line, it means that that the bearish trend is strong and is valid. Okay, and like we said, the first two touches are known as what? The establishment phase. Okay, so for the descending trend line, we must have two peaks. Okay, this is the first peak right here. Okay, and this is the second peak right here. They are the ones that establish the trend, while the next one is known as the confirmation. The next one's known as the confirmation. It could be the third, fourth, fifth, sixth. Is all known as what? The confirmation phase. Let's go ahead and write that out. Confirmation phase. Okay, so if prices keeps respecting it, then prices has confirmed that the bears are still in charge. While if prices violates it, it now means that that the bears are no more valid and prices is now bullish. Okay, so this is how to draw trend lines effectively, and this is very, very important in the accuracy of you drawing trend lines. In order to get the highest accuracy out of trend lines, it needs to be collaborated with other tools. Like we said, trend lines is one of our most important tools in our arsenal, but in order to have that highest probability trade, it needs to be collaborated with other tools in our arsenal. Okay, so what are the other tools that trend lines can be collaborated with? One, trend lines plus chart structures. Okay, so let's write that out. That trend lines, let's put this as number one, trend lines plus chart structure. Okay, so first of all, what are chart structures? It's important to note that chart structures are the coordinated movements of prices on the chart. Okay, so how can you use trend lines plus these chart structures together? Okay, so if we see prices make all of these movements on a trend line, prices comes on a trend line, makes all of this movements, and prices wants to respect the trend line. What will prices do? All of these movements that are coming down, all of these movements moves in structures. Okay, all of the candlesticks will be in structures. We'll see prices make tiny movements like this, okay, to the trend line. Okay, and when prices gets to the trend line, if it wants to respect it, what is prices going to do? Price would have broken structure right here. Okay, so remember that for a chart structure, we have the bearish structure and the bullish structure. Okay, all of these ones that brought prices down are known as the bearish structure, and this is the last lower high. So when prices got to the trend line, it respected the trend line, and that now broke the bearish structure. A break of structure, is confirmed in this case by by the break of the last lower high. So a lower high has been broken right here by the presence of an higher high. Okay, so a trend line in this case has been used with chart structure to get high probability trades, and we can be able to buy to as much as this resistance. Okay, so this is how you can be able to use a trend line for high effectiveness. Okay, it is the same thing also for the bearish structure. Let's go ahead and just do a pictorial representation of that. If we see prices make movements like this, make movements like this, and we see prices makes movements to this level. Okay, so now this movement that prices brought to the trend line for the third touch will be in structures. There will always be a structures. In this case, this is a clear bullish structure. So what do? Wait for what? Wait for the break of the structure. When you see the break of the structure, what do? You can put in the sell entry right here. So when you put in the sell entry, you can be able to sell to as much as this low point right here. Okay, so this is a very, very important way to be able to use trend lines. Collaborate it with chart structures, and in this case, wait for the break of the lower break of this higher low right here. this allows us to know that, oh, price is no more bullish, okay? First of all, it respected the trend line, then all of the bullish structure that took price to that trend line has been violated by what? By the break of the higher low, and you can be able to sell to the low point, okay? So trend lines are very important with what? With chart structures. So the next one we are going to be talking about is trend lines plus horizontal support and resistance levels. Okay, so trend lines plus horizontal support and resistance levels. Okay, so how can you collaborate trend lines with horizontal support and resistance levels? Okay, so for example, let's draw out a resistance level right here. Okay, so this is a resistance level, and what? Let's now draw out a trend line right here that went to the resistance level. Okay, so now if we see prices make clear bullish structures right here, you know, maintaining the bullish structure, and prices now goes ahead and hits this horizontal resistance level. This horizontal resistance level might send prices to break the trend line. Okay, so this is how you can be able to use what? Trend lines in collaboration with horizontal support and resistance level. In this case, prices goes to what? An horizontal resistance level, and that can trigger a break of the trend line and send prices down. Okay, so it's important that what, when you're using trend lines, identify horizontal support levels, identify horizontal resistance levels, as prices can get to these levels and that can trigger a break of the trend line. Okay, it is the same thing also on the bearish side. If we see prices, you know, making bearish movements like this, and it hits what? The horizontal level, you know, we can see prices making all of this, all of this, all of this. And if prices comes to the horizontal support level, that can send prices back to even break structure. Okay, so it's important that what, whenever we are trading, let's take note of what? Of horizontal support levels and horizontal resistance levels, and they can be used for exit, they can be used for entry. Okay, for exit in what way? If you are selling right here, you know that you exit at an horizontal support level. Okay, and they can be used as an entry, because at the support level it can give you a buy entry to this trend line. Then at the break of this trend line, you can be able to continue the bullish ride. Okay, so it's important to note that trend lines with what? Horizontal support and resistance levels are very important, and you can be able to get high probability accuracy with that. Okay, so the third thing is what? Trend lines plus the Fibonacci. Okay, so it's important to note that when it comes to the Fibonacci, the most important level of a Fibonacci is the 61.8. Okay, so this would mean that what? If prices get to a 61.8 level, okay, so let's do this for example, you know, if prices is bearish like this, making all of these bearish movements, okay, and prices comes down, and at this level there's a 61.8 Fibonacci. We're still going to go over to the live chart to show all of this, but if at this level there's a 61.8 Fibonacci here, this 61.8 Fibonacci can act as a support, and it can send prices back to the trend line. Okay, and it can even send prices to go ahead and break the trend line. So a 61.8 Fibonacci should be watched out for any time that we are trading trend lines, and they can be used as an entry and as an exit. For example, if we see an opportunity to sell at the trend line, you know, let's quickly do this. If we see an opportunity to sell at the trend line, you know that what, you are selling to 61.8. Don't never target selling below 61.8. You know that 61.8 is your exit, and at 61.8 you can see a buy entry back to the trend line. Okay, so this works for both the bullish structure and the bearish structure. So the last tool we collaborate trend lines with is what? Is trend lines plus a key reversal zone. Okay, so trend lines plus a key reversal zone. Okay, so what are key reversal zones? Key reversal zones are zones in the market that prices get to and may not be able to go beyond. Okay, and key reversal zone is just a general conception of what is a general name for the Fibonacci 61.8, for the horizontal support and resistance levels, and in general just support and resistance levels that price may not be able to go beyond. Okay, so it's important that whenever we're using trend lines, we don't just draw trend lines randomly. We need to be able to what? identify trend lines with what? With key reversal zones. Draw trend lines specifically at key reversal zones for entries. Okay, this will allow you to be able to get the highest probability trades. Okay, so go onto your chart, look for key reversal zones and draw trend lines around these levels. Okay, that will allow you to be able to get accuracy when it comes to the use of trend lines. So we are going to go over to the real life chart right now to show you how to be able to apply these trend lines in a practical standpoint. We are going to be using US30 as an example to show you all the effectiveness of trend lines when it comes to our entries. Okay, so before we go on to our entry time frames, which are usually the 15 minutes, 30 minutes, or 1 hour, we are going to start price from the monthly time frame so that we can be able to connect all the information. Okay, because it's not just about entry, it's also about understanding what is going on in the market. And there's no way you will understand what is going on with the market without applying a multi-time frame approach, taking the market from the monthly time frame and taking the prices down through a top-down approach to what? To the entry time frames, where we are now going to apply the trend lines for what? For our entries. Okay, so starting from the monthly time frame, what is the first thing we do? The first thing we do is what? Is to identify the real-time points where price is at. Then the next thing is to try to understand the structure that took prices to that point. Without any iota of doubt, price has been bullish forever. Okay, on US30, we can see price on clear bullish structures of higher highs and higher lows. Okay, but we are going to take it from here. This is 2010. Okay, where we saw prices start on small fractals. Okay, then eventually went establish the big fractal here. Okay, establish this fractal. It's also big before now going to establish smaller fractals right here and making the push to the real-time point where price is at. Okay, so when it comes to fractals, I have a full course on fractals that all my students have access to, and they have been able to study fractals and have mastered fractals, and this has allowed them to become a professional technical analyst. Okay, but let's just keep going. Okay, so we saw price start on small fractals here, eventually established big fractals, then went to over again to make small fractals. Okay, so now within the small fractals, what is the last higher low that we can see so that we collapse prices and focus on what we call the range of focus? Okay, so this is the last higher low that we can see right here. So let's just take this to touch the highest point. So this is the last higher low and this is the last high right here. Okay, so within the small fractals, obviously we saw this push exhaustion, then price now made smaller fractal here, push exhaustion, push. Okay, so this window right here is going to be what? Our range of focus, because on the monthly time frame we've been able to analyze that this is the last higher low right here and this is the highest point of the market. Okay, so this is what you want to be able to get, the last higher low and the highest point of the market. So now this window here is our range of focus. Okay, so now within this window, because the monthly time frame is bullish, so within this window we know that what? Any buy we are buying here is in the direction of trend. Okay, and any sell is a retracement because the monthly time frame is bullish. Okay, and we have been able to what? Take prices and have a range of focus. So within this window, if we are buying, it's in the direction of trend. If we are selling, it is a retracement. Okay, so that is the rule. So we're now going to take this window to the weekly time frame to see what is going on the weekly time frame and streamline prices more into what? A range of focus. On the weekly time frame, we have identified all of the overall range of focus. So now let's go ahead and read the structures in order to streamline our range of focus. So here we can see prices make push, exhaustion, push, exhaustion, push, exhaustion, push, exhaustion, and push to this level right here. Okay, so now this now becomes the new what? Higher low within what? The range of focus. This is the range of focus. This now becomes the new higher low right here. So what are we going to do? We will now look for an opportunity within the new range of focus right here. Remember that what? If we are buying in the direction of trend, while if we are selling a retracement. Okay, so now we'll take it to the daily time frame. Within the range of focus, okay, what happened within the range of focus? First of all, there was a break of a trend line right here within the range of focus. Okay, this was the break of the trend line. Okay, and the break of this trend line is what sent prices down to as much as this level. Okay, so it was a situation where prices made push, exhaustion. Okay, remember the first two touches are an establishment phase. Then prices hit this key reversal level. Like I said, you must have what? A key reversal zone. Okay, this is a resistance level and this is the highest point that price has got to, which makes it what? A key reversal level. And this now triggered what? The break of structure. So you can be able to sell from here and you can be able to sell and make some money with all of this movement right here. However, this is the daily time frame. So we will prefer to, you know, pick trades on the small time frames because you can be able to get a tight stop loss while having a wide take profit. But either or, after the break of this trend line, okay, remember we said this is what? Establishment phase. Let's always remember that. Establishment phase, second touch. Then this one is what? This is what? The confirmation phase. So here we can see that what? The confirmation phase clearly showed us that what? That the bulls are weak and the bears are in, and that triggered the break of structure. Okay, so now that the break of structure has been seen, where's our exit? Within this our range of focus, we said if we are what? If we are selling, it is a retracement. So what are we going to do? We'll bring out our Fibonacci from the low to the high right here. So where's our exit? Our exit is at 61.8. We saw that prices came below 61.8 a bit, which is normal because what? 61.8 is a zone and not a pinpoint level. So sometimes instead of prices stopping at 61.8 pinpoints, it could come around it, but it will eventually come back to respect 61.8. Okay, so our sell opportunity ends here at the 61.8. Okay, so now that that is done, we know that 61.8 will now act as what? As a key reversal level. And any buy at 61.8 right here, overall, we are buying to as much as this level. Okay, we are buying back because if we are buying the direction of trend. Okay, so what are we now going to do? We are now going to what? You know, take the level that price rejected from. Okay, this is the 61.8 as a zone level that price rejected from, and we are going to take that to the 4 hours time frame to read all of the bearish structure that brought prices down. Okay, so now let's go up to the 4 hours time frame to read all of the bearish structure that brought prices down. That these are all of the bearish structures, all of these small fractals here, push and exhaustion, all small fractals to price establishing this, and the biggest one right here, okay, to now hitting this key reversal level. Okay, so now price is rejecting at the key reversal level. Okay, and we have on the 4 hours time frame a break of structure has been seen with the last lower high being broken right here. However, prices gave us what? Our first entry confirmation by what? By breaking trend lines on what? On smaller time frames. Okay, so now let's take this to as low as the 1 hour and even to as low as the 30 minutes to look for a trade entry opportunity. Okay, so now we can see that what? First of all, prices got to the key reversal level, which is right here. Okay, so at the key reversal level, what did prices do? Let's take it to the 30 minutes time frame to look for an entry to see what prices did at the key reversal level. We brought our trend line out, okay, and we saw prices make touch 1, touch 2, okay, and this was the touch 3, all rejecting at the 61.8 at a zone, okay, 61.8 at a zone, and this now triggered what? The break of the trend line. Okay, so the break of this trend line here is the first indication that allowed us to know that the buy is ready. Okay, so for aggressive entry, you can decide to buy pinpoint right here at the break of the trend line right here, put the stop loss right here and swing it to the top. We're going to go back to see what the risk reward is. Now, for more conservative entry, okay, we've seen a key reversal level, which is the 61.8 zone. We've seen a break of a trend line. For more conservative entry, you can now wait for what? For the break of a structure. Okay, so there's a structure here, which is push, exhaustion, push, exhaustion, push. Break of a structure happened right here with the last lower high being broken here. With the last lower high being broken here, you could have waited. But if you had waited, your entry would be a bit higher at this level right here. This would have been your entry. But either or, you would have been able to secure an entry on this particular trade. Like we said, one, you could have secured your entry at the direct break of the trend line. Okay, you could have done it at direct break of the trend line right here. Okay, with your entry right here at the direct break of structure, stop loss somewhere around here. Let's see, you know, the risk reward of what this would have been, you know, and this is still a very, very active trade that we are going to buy to as much as this resistance. Okay, so this would be like a 1:8 risk reward, okay, for this particular trade. While if you had waited for more confirmation by what? By waiting for what? A break of structure, you know, which happened because this was the last lower high and this was the candlestick that broke structure, you would have seen a 1:4. Okay, but you can see how the trend line in itself gives us even faster accuracy. Okay, even before other tools gives us structure, waiting for a break of structure will give us 1:4. Why just entering at the break of trend line would have given us 1:8. Okay, so this is how fast trend lines are, and these are trend lines can give us the most effective entries with prices. Okay, so this is how beautiful trend lines are, and this is how beautiful we use trend lines in for high probability entries. Okay, so this is a very fresh trade. Key reversal level identified. So just bring out your trend line. Okay, bring out your descending trend line. Look for counter trend line. Okay, in this case we saw highs right here. Okay, you can see that this is a resistance here. This is another resistance here, another peak. Okay, the first peak, the second peak right here. Then at the third peak, which is the confirmation phase, what the prices do, prices broke above it. Okay, and this now confirmed that the buy is ready. Here are some other opportunities that we traded using the trend line for our entry. Okay, so this point right here, we saw prices make all of this bullish structure up to a key reversal level. Okay, that is this resistance. Okay, so when price got to the resistance, what did we do? We brought out our trend line, touch 1, touch 2, establishment phase. Then on the third touch, we saw a break of the trend line, and that is what sent prices down to all of these movements, down to another key reversal level. Okay, before that opportunity, we had seen this opportunity right here where prices made all of this movement push. At a point, this resistance here was the highest point, okay, which was a key reversal level. And what happened? We brought out our trend line also. When price got to the key reversal level, touch 1, touch 2, touch 3. The touch 3 sent prices down, to this level. Okay, this level is a 61.8 level, and we know that 61.8 is a retracement level. Okay, so we can see prices touch the 61.8 level right there. Okay, so other examples that we're going to talk about again is just beside it, where prices hit a key reversal level here. That is all of these support levels here. So when prices hit the support level, what did prices do? We saw prices break the trend line right here. Okay, so when we saw the break of the trend line, this is a very fantastic entry. Okay, so you could have been able to enter this trade and ride to a minimum as much as this resistance right here. Let's see what the risk reward of this particular opportunity would have been. It would have been like this. We'll stop loss right here, take profit right here for about 1 ratio 2.3. Okay, that was a fantastic opportunity. Okay, at a point also, this resistance here was a key reversal level because this was the highest point price had gotten to. And what did we do? We saw all of the bullish structures right here, all of these bullish trends, okay, hit this level. Then what did we do? We brought out our trend line, okay, from the low point right here and took it like this. Okay, so when prices broke the trend line, this is a fantastic sell opportunity, and we're able to sell to as much as this level. Okay, so it was the same thing also when prices got to this support level right here. Okay, this support level was also a key reversal level, because this support level was a 61.8 level. Okay, this was a 61.8 level, and we all know that 61.8 level is a key reversal level. So when prices got to 61.8 level, it kept respecting the 61.8, and at 61.8 level, what did prices do? Prices broke the trend line. We brought our counter trend line out. Okay, and this would have been a fantastic entry at the break of the trend line. So there were so many opportunities, even at this point also, when prices came to the support level is a 61.8 level. When price came to that support level, what did prices do? Prices broke the trend line. Okay, this was the trend line as at that point. Prices broke the trend line, affecting our entry. Okay, with our stop loss at the low right here, and you would have been able to ride this trade. Okay, so this is how effective trend lines is, and we use these trend lines in getting high quality entries. Okay, so you can be able to buy pinpoint, and you can hide your stop loss. You can choose to hide your stop loss. In this case, hide your stop loss below the trend line, or you can hide your stop loss below the structure right here. Okay, so either or, you can hide your stop loss below the trend line or hide your stop loss significantly below the structure, and just keep riding. In fact, you can just keep riding prices and keep adding on, and you would have been on this trade until prices broke the structure and created a sell opportunity at this moment. Okay, so this is how to be able to apply trend lines effectively. And if you want to learn more on trend lines, I have a full course on trend line trading, okay, in my academy, link in the description below. And click to join my academy, and you would have full access to the course on using trend lines with multiple examples. I have a full video of more than 200 recordings of using trend lines, and you'll be able to have access to that and become better in your technical analysis. So link in the description below, and see you guys in the next video.